All right, let's go ahead and get underway. This is the April session of the Challenge Club, and again, we tend to try to keep this fairly informal. My name is Mark Robertson, founder and managing partner of Manifest Investing. I'm joined here by Lori Fredrickson of Bivio, the firm that makes the club accounting software. I know most of you know and love Bivio. And we actually have a mystery guest who showed up in the back room tonight, Hugh McManus, who's also joined us and is going to stick around for a while. And as he said a few minutes ago, he was thinking about leaving, but then he noticed we have $313,000. And anytime we talk about 313, he's in. So welcome, Hugh, and thanks, Lori.
Thank you. Just tell me that secret.
Yeah, we're going to kick around a bunch of secrets here tonight. Well, tonight's meeting will be truly dedicated to, now I know absolutely none of you here tonight, and again, welcome if you're brand new. I know I see a lot of very familiar names, but I know that none of you here tonight will ever fit the mold that I'm going to describe to you. I have been extremely busy. I did very, very little preparation for tonight's meeting. And in fact, the preparation consisted of sitting down and figuring out if I could even get my computer to turn on a few minutes ago. So tonight's meeting is actually dedicated to that investment club partner who shows up at the club meeting and conducts all of his or her research while, off in the corner of the room, and basically puts things together kind of on the fly to share with club partners. But anyhow, this meeting tonight, this presentation tonight, is dedicated to the busy people of the world. And what I hope to do is, and I think many of you already know this, is we'll be basically demonstrating the utility of manifest investing when it comes to taking care of a portfolio, even when it is a group setting. So let's go ahead and start tonight with how we doing. And I'm going to switch over to the Bivio benchmark, and it should be coming up on your screens here in a second. Let me make sure that I did have the other screen up there. There, everybody should be able to see the performance benchmark report from Bivio, if it's up now. Okay. And up at the top here where you can see the record keeping, we actually are rapidly closing the gap when it comes to the internal rate of return for the Challenge Club versus the Vanguard. I am hearing a little bit of typing. Maybe I will have to mute. I think that's typing I'm hearing. Check me on that, Lori, perhaps. But what you can see is that the Challenge Club stands at 10.4%. That's a rate of return since January 2010, just like is shown right here, versus a stock market which has advanced 12.6 over that period of time. So that may look like a nasty story. That is minus 2.2% on a relative return basis, but it has been much worse than that. We actually went through a considerable cold spell, but we're actually narrowing the gap pretty well, and pretty strong performance from some of the recent additions to the portfolio, from Apple to Regal Beloit to a few others. We'll look at the details of the portfolio in a minute. If you go all the way back to the inception of the club and you look at annualized total return, we actually do sit at a relative return of positive 4.5% since September 1999. So that has also been steadily improving, of course, and certainly in the range where we'd like to be. Certainly like to be higher, but within the range of where we'd like to be. Here's a quick look at the portfolio using the club valuation statement. You can see that we are at $23.62 a share, which is roughly where we were last month. Still some pretty good performance in the portfolio. We do have approximately 7.3% cash on hand, so we'll be taking a look at what to do with that. And with that, well, let's just jump right into the dashboard. Here is the dashboard for the Challenge Club. It has been sorted by projected annual return from top to bottom, so the more attractive companies for consideration would be at the top. The less attractive for accumulation would be at the bottom. I don't think we have anything here that qualifies as a selling candidate or even a challenge candidate tonight. I'd be interested in any thoughts from anybody that would be willing to speak up and just give a quick what are your perceptions of the report card? And the floor is open for anybody to do this. Let me go ahead and see if I can go ahead and raise your hand if you have a microphone, or if you want to enter a comment into the question tab, into the question box. You can certainly make a comment there if you would like. But what do you feel about the portfolio from an overall portfolio standpoint using the type of stuff we talk about at Manifest Investing? This is your opportunity to raise your hand and participate. Anyone. I've been doing this for years now. And everybody's going to be bashful. Well, Susan has her hand up. I'll go ahead and unmute Susan. I think Jeannie's going to make a comment. Go ahead, Susan. Susan Macholik, are you there?
Yes, I had muted myself too, sorry. Since we have so much cash, you know, I do like to spend money.
Sure.
So I would like to consider increasing our holdings in Regal Beloit. And also another idea I'd like to kick around with the hopes that the economy is going to be improving. I'd like to look into some transportation stocks, whether it would be trucking or shipping or whatever. Railroads, they don't come out real well on your screens, but I think might be time to dabble in something like that.
So
anyway, just ideas to kick around.
Try to shop amongst the transportation-related stocks here in a minute if we can, looking for something perhaps outside the portfolio. Well, what type of thoughts do you have with respect to the portfolio, and what, you know, how, Susan, how would you look at the portfolio and decide how much Regal Beloit might be interesting? Susan's
well, it still is, you know, it still has a nice par of 14%. It's a low percentage in the portfolio. We only have 6,000 in it as opposed to, you know, double digits for most of the other stocks. So I try to bump that up to maybe $10,000 worth, maybe another 100 shares. Again, this is hoping the economy is going to be picking up and manufacturing will continue on.
Okay, and we can actually.
All right, I'll make a motion. How about that?
All right, a motion.
I move that we buy 100 shares of Regal Beloit to give it a greater percentage in our portfolio.
Okay, and we'll wait and see if anybody will second that. I see we have a number of comments and questions. Lori, is anybody rising to the top of the stack there to second?
No, but there is a question on what do they do? What does Regal Beloit do? A couple questions to talk about the company a little bit.
Okay, Susan, you're kind of close to this one a little bit. Can you comment to that at all? I'll jump over to the value line page.
And we do have a second.
Okay, why don't you jump to the value line page? That would, yeah.
And you can see we actually came into this one back during this low spot on the far right. Can you see the screen? Can you see Regal Beloit on your screen?
Yes, we can. It's a little bit small, though.
Okay, let me see if I can bump it up a little bit here. That'll probably help.
There.
Yeah, here's again, we always like to check in on the low total return to make sure that that's not too far out of the park. Now here, the value line analyst, if I had to guess, is being much more conservative than Morningstar or S&P analysts. But we actually came into this one a few months ago and actually have a fairly nice gain already from this dip down in price. I'll go ahead and go down to the verbiage here. And for those of you that don't know, Susan actually lives in the Beloit area, so you can see they make stuff.
They make stuff, electrical stuff and mechanical stuff.
Yeah, mechanical and
stuff that helps stuff work.
You'd find there is stuff in factories, in packaging plants. They do stuff for boats, I know. Well, there it does. It says motor boats.
Yeah, small motors and small generators.
Generators. You can see on the right they're making a big deal out of the acquisition of Milwaukee Gear. I'm not familiar with Milwaukee, but they're basically a very tool-time type company. This is a fresh value line report from April 20th. That's in the current update set. Decent financial strength. In fact, fairly decent earnings predictability for a company in this particular industry. And as we said a few minutes ago, fairly decent return. That's not anything to do handstands over when it comes to Value Line. They do have a little bit of debt, but it's a very attractive interest rate. And we can tell that by taking a look at the $30 million that they pay in long-term interest. And let me see if I have a calculator here. That's what I get for going out of town. My staff, also known as my marauding senior in college, has rearranged my desk. Well, we'll just rough it and call it 3%. I can actually run the calculation over here. Lori, are we hearing from anybody as far as a second?
Yeah, you have 2 seconds.
Okay, so we've got enough seconds on it to take it a little bit further. Any other questions or comments from the audience? This would be, again, coming back to let's go ahead and take a look at the Chronicle. Here are the assumptions that we're making. 14% sales growth, about 6%, 6 to 7% margins, a PE in the neighborhood of 14, and a PAR of about 14.
2 people are asking about debt, Mark. I guess they had a pretty high debt level and something you were just looking at.
Yeah, we just had the Value Line up there, and we're looking at, again, this is where we talk about it's not just the debt. This is they're in an industry that's likely to have some capital intensiveness to us. In other words, they have to borrow some money they basically need a mortgage to run their plant. And in this case, they have a $909 million mortgage on which they pay $30 million per year in interest, long-term interest. Nice.
Mark, this is Susan. I figured out the rate is 3.3% interest rate.
Right. So that's thank you, Susan.
Okay.
Thank you for bailing out my son. He was in trouble until now. He's not in trouble. Glad to have him here. Anyhow, that 3.3% interest rate you put in context by basically that is the interest rate that anybody, banks and institutions and private citizens, will loan them money at that rate, and that's a very strong investment grade type characteristic. Just to give you some context, when the average company goes out and seeks money in the form of debt, they end up paying somewhere between 5.5% and 6% interest under today's current conditions. Obviously, that number ranges anywhere from close to 0 to, let's say, 12%. But on average, the average company with an average investment grade is going to be, in that 5.5% to 6% range. So even though it's 37% of the total capital, we basically have a situation where it's a pretty good interest rate. They have decent cash flow, a little bit of cash on hand, a little bit lower than it has been in years, but I don't think I would be too concerned about that. Any other comments or questions on Regal Beloit?
Don Lina is saying that the bottom right corner of the Value Line says 3 to 5 years does not look as good as far as growth.
Yeah, and that lines up with their slightly more pessimistic expectation of, somewhere in the upper single digits, that 7% low total return forecast. So if you believe that, not quite so good. But again, when we take a look at the bigger picture, including some of the other analysts who track the company, we have a little bit more optimistic outlook. Our PE of 14, again, that's based on a consensus of Morningstar, S&P, and a few others, actually matches up with Value Line. Let's see where we actually have the biggest difference. Their profit margins are in the 7% range, and ours are actually just a little bit under that. So the only place that the difference can be is in the growth rate of 14%. That probably behooves us to take a look at a quick SSG on the company, stock selection guide for those of you that are not familiar. Let's go ahead and pull up a quick stock selection guide and get a look at that. See if we can't take a quick snapshot look at the growth rate. Ticker symbol is RBC. And let's just take a quick look. Take out some of that ancient history. Might be a little bit steep. What we might do now is go ahead and take a look and make sure that the sales forecasts for 2011 and 2012 are pretty good. You make sure that we see something north of 8.4, because if we take out some of this more older history, and let's go back and look at the value line page, it's probably prudent to do that. If you go too far back in the operating history of Regal Beloit, notice this common shares outstanding line, 45, 43, 42, and then it begins trailing off dramatically. I would place a whole lot more emphasis on 2009 and beyond. This is a company that probably behaves a little bit like Danaher, a little bit of an acquirer, and that probably explains some of that debt also. From that suggestion, we might want to, yeah, go ahead.
You need, can you update this SSG? 2011 has been reported.
Oh, I may be pulling, let me see where the data is actually from. Oh, I wonder why I'm pulling, well, that's actually on March 13, 2012. Let's go ahead and update it on the fly then. Let's go ahead and take care of that. And in fact, let's go ahead and do it this way. What I'm going to do is go out to Regal Beloit. And again, if you're with us or you're relatively new to this is just some of the stuff that we do to kick around and audit and do a little bit deeper dive on companies as we're checking the numbers. Right now, what we're basically checking is, do we believe in a growth rate somewhere around 12 or a growth rate somewhere around 6 or something like that? So what we're going to do is go ahead and grab the analyst estimates for Regal Beloit. And as Susan was saying, we've got over here, you can see that the year ending 2011 was 2.81 billion, so 2.81 billion, and then we'll go ahead and punch in 3.37 billion and 3.59 billion for the next 2 years. So what I'm going to do now is just cheat the software a little bit and make sure that we have the capability of adding in 11 and 12 and 13 so that we can take a look at a little bit bigger picture of the current day company. Let's just focus in on the sales at this point. And again, this is starting to give me a little more confidence in kind of the merged company, if you want to look at it this way. Just for kicks, just kind of that picture. So basically, if you took a look at and if you went to the trouble of adding in the 3 to 5 year forecast from value line, that's how you would get to our 14%. But again, just think about what we're doing here. We're saying ignore this stuff because it's basically a previous version of the company. We want to focus in on the most recent operating history, including a couple years of analyst forecasts. And in that case, it's not real hard to get to a longer-term growth rate of somewhere in that 12, 13, 14% range. So now if we come back to the Manifest Investing page on the company, you'll see that's where the number comes from. So again, even if we thought about that being a little bit rich, in other words, let's say a 12% growth forecast instead of a 14%, we're still looking at a company that's going to have a double-digit projected return at this point. Anybody else have any comments or questions at this point on Regal Beloit, or we can call the question? Are we seeing anything, Lori?
Just Susan said she also chose 13% on her SSG when she did it.
Okay.
I don't see any other comments about Regal Beloit.
All right, let's go ahead and call the question. We're going to have to do it again by raising hands because we haven't taken the time, because I'm an idiot, to go ahead and put the polling stuff in place. Now I've been busy beyond my wildest dreams. Let's go ahead and do it by show of hands tonight. If you'd like to add 100 shares, we'll be doubling our position in Regal Beloit. Signify by raising your hand. And we do appreciate when people out there in the country are good to any of our Midwestern, upper Midwestern companies, including Wisconsin. Looks pretty favorable from here, Lori. What are you seeing?
I think 20 yeses.
Okay. We'll go ahead and clear hands all down and allow anybody to vote no on accumulating 100 shares of Regal Beloit.
Looks like only, well, I see 6 no's here.
Okay. And if any of you would like to expound on why, other than building up a future I told you so, we'd love to hear. I can certainly rationalize a vote on either side. I mean, that's not saying anything is right or wrong here. The motion does pass, but I mean, I could certainly see somebody saying, I'd like to wait for the next dip like the last one we bought on or something like that. It makes a lot of sense. But it is amongst some of the more attractive candidates within the portfolio also. Going back to the portfolio. And for purposes of demonstration, what I'll go ahead and do is copy the worksheet. Let us enter the sandbox here. And basically use the worksheet to go ahead and modify our position in Regal Beloit by using the edit holding slice. I'm switching it to 200, and you'll notice that it actually takes the amount out of the cash, and Regal Beloit is now 4% of the overall portfolio. Let's go ahead and go back to sorting it by par. Now, Susan has actually also recommended that we take a look at some of the transportation stocks. We can certainly go do that.
Gene Tink is also asking about maybe energy.
Okay, so in other words, I've come to this meeting without my watch list stuff prepared, and maybe we want to do some watch list type stuff. So what I'll do is just open up a fresh page here so we can leave that worksheet back over here. And what I think we'll do is let's go ahead and see if we can't identify some categories. Well, first of all, what I would like to do is demonstrate for those of you that are here and are not familiar with our ivory soap screen. It's the only one I ever use. I basically come down and I enter 99.4 in the manifest rank. And again, if you're new here, the manifest rank is a combination of kind of an aggregate rating that includes both the return forecast, the projected annual return, and the quality rating. And we penalize companies that get PARs or return forecasts that are way too high. If they go into the ozone or the stratosphere, we begin to penalize them. And then that's the only number you need to add, and you'll be looking at the top basically the top 15 or 16 companies in our database using tonight's information. This is why I don't believe in watch lists anymore. This is my watch list, and it always changes, and it's there every day for me. And what I would recommend is that Susan or Jeannie, if you see any company on this list that fits either of those things, speak right up. I do see Carboceramics under oil and gas, which would certainly be an energy stock. So is PetroChina. That one could be a little bit interesting. Venturing into joint ownership with the Chinese government, I'm sure.
Butch Lang is mentioning a small cap energy company, KOG.
KOG, that's Kodiak. That's one that I think somebody brought to us not too long ago. We can certainly take a quick look, and then we'll come back and search for specifically within those other industries. Kodiak Oil and Gas, it's actually shot up quite a bit, and I think it's helping Butch's groundhog portfolio, if memory serves, him and perhaps someone else. Not real attractive on the quality side, but this portfolio has a sufficient quality that if we made a case for it, could make some sense. It is not covered in the Value Line Standard Edition. I can tell that by the asterisk there. So that's certainly one that could be kicked around if somebody wants to go to the trouble of motions. What I'd like to do now is take Susan up on her suggestion to let's go in and identify some of the transportation-related stuff. I think we'll leave the automotive stuff out for now, unless you object, Susan. I'm looking for just...
no objection. No.
No objection to that, huh?
No.
Now be nice to those automotive companies. It's also big in your area, you know, or at least it was.
What about the railroads? The railroads look interesting.
We'll get to the railroads here. I'm just kind of looking down the list. Stop me if I miss one. I could throw maritime in there, but that's kind of, well, we'll leave it in there. There's no actual transport sector, so we're actually forced to look within the industries for this. Let's go ahead and throw a railroad in there in case we want to feel Buffett-like tonight. We could put retail automotive in there just for kicks. I don't know that there's anything else that, other than trucking, reaches out and grabs. Let's look for companies in the sweet spot. So we just click that on, and we'll be searching for companies with a projected annual return between 12.9 and 17.9. What do you think, Susan? Just excellent quality and above?
Sure. And maybe some cap stars.
Pretty good financial strength. And what would you like to look at now?
Some cap stars.
You go by the stars or by the All-Star Index?
Oh, I don't know. Whatever.
Let's go with 4 stars. So we want somewhat favorable sentiment over at the Motley Fool's Caps stock picking contest. We really could use some bigger companies in the portfolio, but we'll kind of leave it. Let me see if the charts are over here. The reason I say that is, you know, as we're looking, you know, here's the size or the growth diversification of the portfolio, and again, the large slice is the smallest one. So if we did want to have perhaps a little bit of bias, we might want to bias towards the larger companies here. So let's go ahead and see what we get so far. We get one company. Knight Transportation. That's kind of a long-time community favorite.
Mm-hmm.
And, you know, if you talk about a nod towards a potentially improving economy, could be interesting. Let's go ahead and take a look at the value line page for Knight, just for kicks to see what they think the projected return is. And you see there's a little more consistency here with compared to Regal Beloit, at least in my opinion, in that we see a low total return forecast of 15% here. Now I did it. Got rid of my... Anyhow, there's a low total return of 15%. And again, this is a company that is fairly well known within the community. I believe it's in the Manifest 40, so it's in amongst the 40 most widely followed stocks. Pretty good looking track record. It is going to always suffer in a recession. So if you believe that we're going to be hit with another really nasty recession anytime soon, probably don't want to go there. But you can see that it actually has been recovering fairly nicely. From a stock price perspective, it's up about 50% in the last 6 or 7 months, along with many other things. Is that anywhere near what you may have had in mind, Susan?
I was just open. I've been dabbling in some railroads and a company called Kirby, which they do shipping on the Mississippi. They do petroleum, I don't know, some kind of petroleum stuff up the Mississippi. However, the price has really taken off in the last 6 months, so that probably is out of the range. I'm just thinking, again, hoping for this big recovery and trying to get in the ground floor of some of these companies.
And I would argue we already are on some of them, so we'll see if we can. I'm going to open it up to a wider to all industrials. And in fact, I'll go ahead and leave the caps out for now just to see if we get any other hits on transportation-related type stocks. And we're not actually getting anything close to the railroads. Let's go ahead and jump over to a railroad just for kicks. Can't think of one off the top of my head. NSC, Norfolk Southern.
UNP.
UNP, of course. You're too late. I beat you to Norfolk. I think I beat you. There's probably a bunch of you out there doing your own searches right now. Put your keyboards down and stop using up the bandwidth. Here's Norfolk showing up at a fairly decent return. Let's go ahead and pull up the railroad sector in general. Interesting. Up at the very top here, this one actually had some very solid results tonight. Tonight or yesterday, CSX. And it's pretty good looking numbers there. It'd be interesting to see if you're a stock watcher following CSX over the next few days. I wouldn't be the least bit surprised based on what I was hearing from some of the analysts kicking around tonight. I'd be watching for some fairly dramatic improvement in these numbers. You can see they've deteriorated over the last couple of months here, and they might be heading back the other way. Don't know that, but just kind of kicking that around. If, uh-oh, that's not nice. Sometimes when you play and do a little bit creative things with Toolkit, it dies. Has been my experience.
Especially if you're running a very old version.
I still run 3. I still run 3 on my machine. It works just fine.
Okay.
All I want it for is the graphs anyhow. There's an interesting picture. Without looking at anything else and without shuffling things around, that tells us that the profitability of the company has been rather dramatically improving over the last few years, just by the way those lines are crossing like that. But again, the numbers are in for 2011. I think if you see significant strength in 2012 and 2013, this is the type of thing that could get quite interesting. It's what Susan is talking about, digging a little bit deeper on and figuring out what's going on here. And here's another look that's very important characteristic to understand, that for whatever reason, whatever drivers are in place there, the profitability of these companies is definitely on the upswing, and probably goes a long way to explaining why the Burlington Northern no longer exists as a separate company.
Well, Mark, I think one of the reasons railroads are doing better is because of the high gas prices. It's cheaper to send things by rail than it is by, over the highways. The thing we have to watch for in the railroads is the ones that are carrying a lot of coal. There's a move to burn less coal in the United States. However, the rest of the world is still using it, so it still has to be shipped.
Yeah.
But so that's one thing I looked at with the railroads.
Yeah, and anytime you hear that, I think that's my background. There's no way for the utility industry to shift dramatically overnight off of coal, no matter what they say in Washington. And we've actually spent trillions of dollars to make coal-fired plants, a lot cleaner than they used to be. They're also a lot more expensive than they used to be. And so that investment and everything else has to be factored into the decision to make them go away. So I think they probably will curtail over time, but not overnight. The other thing another fun fact for everybody out there is that a lot of people don't realize this, but coal is actually solid natural gas in a way. And because all you do with a coal-fired power plant is you crush up the coal and turn it into natural gas to burn it off. And you obviously end up with some ash and that kind of stuff. But literally any plant that is designed to fire coal can also fire natural gas. That's one of the reasons that I have natural gas in my groundhog portfolio this year. Even though I'm getting killed, longer term I think I might be okay with that one. So that's why it's there, for those of you that have wondered what in the world is Mark doing with that natural gas in his groundhog portfolio. All right, so back to the portfolio. See if we have anybody out there that has any suggestions about anything else that we might do tonight. We do still have 5% of cash, 5% of total assets in cash. And again, it is sorted from top to bottom. One I thought we might kick around is, I know we don't want a whole lot more healthcare in the portfolio because we're up at 32%. But should we think about ResMed again? I think we recently voted on ResMed. It's one of the more attractive looking projected returns in the portfolio. Be interested in hearing any objections or support for a notion of adding to the ResMed. The reason that I go there is right here. We only have a little under 3% of total assets in ResMed. Any thoughts or comments on ResMed? We can also go and look at some energy in case we can spot something from...
We do actually have a motion to buy 100 shares of SLB.
A motion to buy 100 shares of Schlumberger. Let's go ahead and put Schlumberger on the board without any shares, just so we can see what it looks like. All right, so we see a company. For those of you that are not familiar with it, this would fit Gene Teakin's suggestion for an energy stock. They are one of the world leaders, if not the world leader, in oil and natural gas field services. So they would be the customer. Their biggest customers would be Exxon and Conoco and all those type of companies.
Sandy Castor is seconding the motion too.
The motion is also seconded. So again, this one is no stranger to anybody. We did feature it in as our cover or our stock to study for this month. So it is one that we have kicked around a little bit. And again, for those of you that might not be as familiar, it's right on the home page, Schlumberger. And so without any further ado, there's your visual analysis. Again, a recession is not going to be too kind to the company. Cycles are natural. But again, the outlook is pretty favorable for the company. Projected return somewhere in that 16 or 17% range. We can do a quick gut check on value line. And you did say you had a second also, Lori?
Yep.
Okay. So again, at least in this case, value line agrees that the projected low total return, that's the one we like to use as our best second opinion, is pretty substantial at 17%. Company has been beat up a little bit. The PE around 17. Do a quick triple play look here maybe, just in case it qualifies. 17 projected to possibly become as high as 21. So that's kind of a triple play-esque condition. And then again, the company cycles. You know, that particular industry is going to go through cycles where you're going to see swings in the net profit margin. So I wouldn't get too carried away with this part of the triple play, but the recent net margins have been in the 12 range, and at least it's projected to be something similar to that, slightly greater, 3 to 5 years out. So I wouldn't get too carried away with the triple play here, other than to say it's certainly there are no real chinks in the armor there. Any other comments from anybody else out there on Schlumberger?
One of the ranchers is saying, should we amend the motion so we have a total amount of $12,000 to make it a significant portfolio position?
The motion is right now for 100 shares, so that would be like, call it $7,000 invested, 3%. Could make it 200 shares if, I don't know who made the original motion.
Gene Teakin made the original motion.
If Gene would be receptive to modifying it to 200, we certainly still have cash that that would spend a pretty good portion of our cash, but we'll have some contributions for tonight, so we wouldn't be fully depleting us for next time around.
Jean says that's fine with her to go with 200.
And again, with the sandbox, you can say, well, okay, 200 shares. That still leaves us with $2,630. You can play the what-if game of what would that do to the portfolio. If you wanted to put that transaction on standby, you can actually click on the little green arrow, and it goes down here into a holding pattern. So again, just some of the what-if type capabilities here in the sandbox. Let's put it back in. And we'll assume Sandy Castor is seconding it at 200 shares, unless she objects. Reseconding her existing second. And by the way, for those of you out there that are uncomfortable with how this is going, we operate under Robertson's Rules of Disorder, not Robertson's Rules or Robert's Rules of Order for sessions like this. So Robertson's Rules of Disorder are prevailing here. I'm kidding. Let's go ahead and call the question. We'll go ahead and check the attendee list for please vote yes by raising your hand if you would like to add 200 shares of Schlumberger to the portfolio. One of these meetings, Lori, I'm coming as a guest, so I get to vote.
This is pretty popular. 3, 6, 9, 12, 15, 18.
And by the way, while Lori's counting, Hugh McManus did send a note to me that says, Walgreen looks good. If it kisses and makes up with Express Scripts, lots of upside. It's a big if. I was in St. Louis this weekend, and they're not real happy about the way all that is going. What's it look like, Lori?
Looks like 26 yeses.
Okay, we'll clear those and give people the opportunity to vote in opposition. Bob and Arlene, Diane. This one's going to probably pass with a little bit more muster.
Yeah, it doesn't look like too many people are against that.
Let's go ahead and consider that a passed motion.
Yeah, just 4 against.
And by the same token, I could understand people being apprehensive about that too, with perhaps a timing type concept or something like that. But pretty good company. So with that, we're basically at a point where we're down to a minimum amount of cash. We can basically talk about, I'm showing 45 minutes into the meeting. We're out of money, but if you guys would like to talk about any particular subject, the floor is open for any questions that you might have. I'm going to use this time to actually jump out and go over and check in on, this is something we never get to do, so I'm almost getting goosebumps here. Going to go into the forum and see how we're doing on the Challenge Club Select. I haven't actually looked, so if I break out and break down in Tears Hill, you understand. Last time I looked, we were doing pretty good. I'm going into the Groundhog Challenge forum folder and looking at the scoreboard at the top, clicking on the 2012 scoreboard. It has to load them up here, so it'll take a second. As Lori was bragging a few days ago, they had the top 2, and they now have the top individual, Chuck Brunell, and they are the top club still at 4th or 5th one down the list. Dan Hornick's at the top. Way to go, Dan. Go Badgers. And lo and behold, for the first time in the last couple of years, our selections for Challenge Club Select, everybody give a cyber standing ovation, and cross your fingers or pray, whatever suits you best, about hopefully in the next few months. Here are our selections: Apple, BioReference Labs, Cognizant, CACI, and Quality Systems. And boy, I wouldn't bet against Quality Systems being okay, relatively okay for the rest. So for the first time in quite a while, in pretty good shape there. Let's see what else is going on. Let's see what Chuck has in his portfolio. Guns and butter. Good stuff. Any other questions there, comments? And we're only $14 behind the Northern Traders. Woohoo!
Dan says he has 4 of the 5 Challenge Club stocks in his portfolio.
Good.
So whatever one he doesn't have is the one keeping the Challenge Club back. Google.
Oh, he's got Google.
Yeah.
He's gonna.
That's interesting because Google just came down.
He'll be split in one of these days, and I'm kidding. I hate splits. All right, are there any questions on the floor? Do people want to go watch hockey playoffs, or is there anything good on TV tonight?
Well, I don't know. Somebody asked about UPL. I'm not sure what that is.
That's Ultra Petroleum. That's kind of a shot at me, because notice I'm down here on the wrong end of the list. There's Hugh. And Norm, by the way, is going all China. So you can see Ultra Petroleum is off significantly, UPL.
Is UPL Chinese?
No.
Because Norm is the one asking about it.
It's one of the fracking companies. So
Hey, language.
This is a swing for the fences. Ultra Petroleum has a huge projected return. I'm swinging for the fences, and I'll either be right or really wrong. It's an interesting company, again, unless, there's an explosion in the supply of natural gas, so that's causing some of the duress here. But these are the guys in Pennsylvania doing Marcellus shale holdings.
Did you have 7 companies in your pick?
Oh no, some of those are. Oh, I don't want to go back and look at it. It's too. I break down in tears every time I look at it. No, one of those was a small cash left over, and I don't know what the other one was. Just clearly some messing around that's not working very well yet. Well, for those of you that follow,
I know the feeling.
Yeah, we're kindred spirits there. For those of you that play with this stuff at all, part of the rationale, part of the driver is to try to pick up a company which has basically an oversold condition. I'm switching to 1 year so we can see it a little bit better. My theory was that even all the way back in this time frame here, you see this is shown as oversold. And the question is, can it get any more oversold? And the answer is obviously yes. And it's overselling its way to probably zero by the time I'm done with it. But that is the situation.
Can it get more oversold?
It's getting to be very deeply discounted, and I'm trying to figure out how I can leverage up my position in the groundhog portfolio.
Mark, do you ever look at the scroll to the bottom of this, the gallery view?
The gallery view.
Mm-hmm.
No.
This is something Marianne Davis said in one of her talks. And scroll all the way down to the bottom, and it will give you the technical analysis.
All right.
Point and figure. Okay. She says she doesn't know how to read this point and figure chart. She just reads a little bit. If it's red, it's bad. Here it says P and F pattern.
Yeah, that's point and figure.
Well, no matter what it says, if it's red, it's bad. If it's green, it's good. And that's as much as I know. And the other thing she looks at on this page, if you scroll up a little bit, you see where that green and red mountain kind of thing was.
Oh yeah, this stuff here.
Yeah, that's the money coming in and out.
Uh-huh.
So
well, Well, I would have been okay there for a while.
Yeah, yeah. It's just lately it hasn't been very good. And that's as much as I know. So.
Yeah, and that, what actually Susan is pointing out here is the point and figure type charting. I do not use it that much myself. This is the actual technical analysis that was most prominently featured or most frequently featured back in Better Investing magazine when they had a technical analysis section. And I know that Dan Hess uses it, and I know that a few other of the people use it, and it's a little different. It takes a little getting used to, but it can be a very just the fact that so many people out there use it it's worth noting. And I notice here that the bearish price objective, that's $1, by the way. Ooh, that's not nice. Thanks for making my night.
And one other thing on that. Oh, excuse me, Mike. One other thing on that point and figure chart, Marianne said also to check the date. Now the date on this one is December, so it probably is not very valid at this point. We see it's December 13th of last year.
Yeah, and you have to watch the scaling down at the bottom or wherever it is on here, because it's not a regular time series. All these little numbers and annotations are actual months.
Those aren't hugs and kisses, huh?
Those aren't hugs and kisses, no.
Okay.
But I liked your explanation first, that red is a bad thing.
Red is bad, green is good in that little explanation thing.
Right,
so.
And what she would have told me is back when I bought it for my groundhog, all of this was already here. So it was already ugly. So that's probably all you need to know. Interesting stuff. All right, I'm showing 923. Any other comments or questions on the portfolio or anything else we've kicked around? We will actually leave with a slight improvement in the portfolio to a par of 15.7. Everything else pretty much stays intact.
Yeah, I mean, a couple of people had asked about a couple of their stocks, CRR, EXPD, Forward Air. I don't know if you want to talk about any of those.
Yeah, Expeditors International is always good. CRR is Carboceramics. They're also related to the fracking question. It's one that has come up. It was a groundhog favorite this year. You can see that it also has an elevated return forecast. It's also taken quite a hit here in recent days. So it was at 97. I don't know what it's at now. We can take a quick look. Well, it actually shows as the top in the industry. I'll just click through right here. So that could be equally compelling, and in fact, you might do a study of Carboceramics versus Schlumberger if you wanted to do a side-by-side comparison. Might be interesting to take a look and see if this one has any compelling characteristics compared to, certainly against UPL. And that actually does have a little bit stronger pattern of possibly finding a support, an area of support. And by the way, for those of you that are skeptical about technical analysis, one of the things that George Nicholson, one of the founders of the NEIC, recommended is understand the concepts of support and resistance. Now, I just showed you a case where the company that I chose for my groundhog hasn't found support yet, so it's basically still in a kind of a free fall. This one here is showing signs of possibly having a support condition fairly close to its current levels, and it's also down at that relative strength index of around 30, so potentially oversold. So with a high par and potentially oversold, it could be a fairly intriguing position to take a look at from not only a long-term perspective, but an entry position. We'll go ahead and do Susan's thing here and see how the point and figure looks like. You can actually pull up the point and figure all by itself, but I like scrolling down through this pretty stuff. This one also looks fairly ugly from the point and figure standpoint. Probably not as bad here. No, you see a bearish objective of 70. That's not quite as extreme as the one that I have. But it has been materially weak, and that's what this is basically confirming. but some decent characteristics. The other one that was brought up that is definitely worthy of study is that Expeditors International. They're an importer, exporter, expediter. It's always one to stay, it's good to stay pretty close to. Now their projected return is a little bit above average, very high quality, but certainly in its attractive range with respect to relative return over the long term. And Expeditors, as you dig into it, you'll discover is a solid, very solid company. Don't believe they have any debt, no debt. You can see fairly substantial return. Definitely one worth keeping at the tip of our tongue for future editions of the Challenge Club. It's a good company. A+ financial strength, as you can see down there. Good stuff. And like I told you before, I no longer believe in watch lists, but I just simply remember Expeditors and would certainly watch for it to appear in any stock search results we might do in the future. Anything else, Lori? I'm showing 928. Do we have any other comments or questions, or should we do a...
Somebody's saying that they're not big on CRR because the way it's expressed is that fracking is the moral equivalent. So owning this stock could be a moral equivalent of owning a tobacco stock. I guess it's just controversy on whether fracking is good for the environment or not.
Yeah, and that's certainly something worth digging into and deciding how you feel or what you believe. I would just encourage everybody. We had this discussion in either Wichita or St. Louis, I don't remember, and I would just encourage you to collect opinions and make sure you aren't listening to one side. As your former senior contributing editor, we always tried to collect both sides of any story. I will tell you that some of the evidence that I've collected in doing that suggests that there is no single documented case of environmental damage from fracking yet that is definitive. That's not to say it's not happening, but it's just to say there is certainly room for debate. And I would just encourage everybody to gather your research and decide what you believe, and no one would ever fault you for saying I'd stay away from that one for tobacco-like reasons if that suits you. That's up to you as individual investors.
Mark, this is Susan.
Yep, go ahead.
Would you consider, not for tonight, but we may want to challenge Pepsi with Coca-Cola. Coca-Cola came out with some pretty good earnings. Was it yesterday or today? I haven't looked at it any further than that. I just read the earnings report. I don't know if that's worth a challenge or not.
It's a good point. My only concern would be that I heard on the BuzzFeed or whatever that Coca-Cola is at a 10-year high tonight. So
oh well,
that might get in the way of that comparison. We can certainly do that. In fact, let me jump out of here, and we can do just a really quick demonstration of how you can put two companies side by side. And we'll call it
sodas.
The Soda Challenge. There you go.
If you were in Michigan, you'd call it the Pop Challenge.
That's right. That's right.
Or we could call it Soda Pop.
And literally just put the two. I'm just going to put $100 in each one, put them side by side, hit submit, and then you'll have a side-by-side comparison of the two. And as I feared, you're right, Susan. It's strong. You'll probably see the fundamentals actually ratchet upward. I wouldn't be surprised to see a a strengthening of growth. By the way, they had positive results coming out of Europe when they expected the European economic conditions to cause some suffering there, and it did not. So this could actually boost up a little bit, but the problem is the projected return is also reflects that relatively high stock price.
Well, perhaps by next month there'll be a little dip, and then we can compare them.
Yeah, exactly.
So we'll see.
It's a good point, though. It's always worthy of watching. And again, if you're out there and you're a stock watcher for Coca-Cola or a stock watcher for some of the companies that we've talked about here tonight, CSX being one of the other ones, the railroad company stock, watch for an improvement in those fundamental conditions. ResMed is projected to perhaps have some strengthening of fundamentals, and it's something to watch out and report back to your club partners. And you can see that Coca-Cola was probably a pretty good buy 3 years ago. And again, at a stock price of 39, it's kind of borne itself out here. But now it's actually creaked back towards a projected return of about 10, which is fairly ordinary for Coke. And it's already up 2% tonight, so probably open with a 2 or 3% gap tomorrow morning. All right, with that, I'm going to save the portfolio with the changes that we made. I want to thank everybody for their participation. Thank you, Lori, and thank you, Hugh, for lurking if you're still out there. I also want to make people aware that Mr. McManus will be with us Sunday night to do a closer look at pipeline. Are you out there, Hugh? You have anything to say about Sunday?
Yeah, I'm here. You can hear me okay?
Yeah. You want to tell the crowd what you're going to do on Sunday night?
Well, it's really a training session to teach people how to get information on drugs that are in development. Certainly not an endorsement or a recommendation that you look at emerging companies, but they're the ones that are most interesting to look at because they respond immediately to news about changes in the condition of their drugs. So the presentation will review the FDA website. It will tell you where to go and look on that site. We will go through the clinical trial process again. I say again because I've done it at the national event a couple of times, but I guess a small percent actually attend the event. So we'll do the drug development, clinical trial process, how it impacts the drug. We'll look at the critical junctures, and we'll use the FDA website and some other sites as a resource that you can certainly explore on your own.
Cool. And
it will be 2 sessions, and we're going to use as examples the 2 diet drugs that are up for review by FDA.
Cool. Thanks, Hugh. We'll look forward to that. So it's going to be a 2-part session. The first one will be Sunday night. We did have it scheduled for Thursday night, but we decided to postpone it to get out of the way of the Better Investing Ticker Talk session, which also is this coming Thursday night, and we'd encourage and invite you all to participate in that. It's one of Better Investing's free sessions. And
Mark,
it's there.
You cut out a little bit there. You might want to say whatever you just said again.
Oh, I cut out a little bit?
Yeah.
All right. Well, we're just saying that this Hughes session was originally scheduled for Thursday night. It's now scheduled for Sunday. We wanted to make way for the Better Investing Ticker Talk session. It's actually their first annual review, and it's one of the free sessions that they do, and would invite any and all of you to participate in that if you're interested. Let me know if you have any interest in that. So with that, we'll just kind of close up with this tribute to the Unprepared Stock Investment Club partner, and hopefully this was a way to show that you can still be prepared if you just come simply armed with your laptop and sit over by the fireplace while everybody warms up. And
you have somebody like Susan in your club then.
And have some. It's always good to have Susan in your club. Well, again, thanks, Lori.
You're welcome.
And good night, everybody. Thanks for coming out. Take care.